Good evening, everyone. Welcome to Hit the Bid here on February 16th. This is Ty Robbie here with your Week 7 Market Watch. Today we're going to run through our charts and see what happened in these markets over the last week and see what we can look forward to as we head into Week 7. So let's jump in and get started here. First up today, we got our April live cattle on the board. We did have a fairly quiet week in this cattle market. Live cattle prices picking up a little ground while those feeder prices remained steady last week. We did see here for this April live contract, prices opening up here, Monday and Tuesday's action balancing out in some tight ranges right on top of that 20-day moving average. Good signs of support early last week after seeing some volatility here throughout the 4th, 5th, and 6th of the month. But this market able to stabilize here and see a little bit bullish momentum kick in midweek. Wednesday's action driving up into the 240s before stabilizing once again there on Thursday and Friday at a $2 range. All the upside we could get was just enough to close this overhead gap that was created from the February 5th gap and go to the downside. We did get that gap closed here, but price is only running up there to about 241.5. That was about all the upside we had last week. Good balance action here on Thursday and Friday, though, setting us up for a good bullish continuation move as we head into Week 7. Last week we did see that markup and price balancing out here, finding good support near 240 and putting some pressure up here on this 241.5 line. We should see some early bids rolling in above 241.5 next week. Get this market moving higher. Should be pretty smooth sailing up here towards the current year's high right around 244.5. And from there, the bulls are going to be targeting this overhead gap and potentially those all-time highs. We are not far off from that, and this uptrend still remains intact. We've got good structure, higher highs and higher lows continuing to push this market higher. As long as the bulls can continue to defend this 234.5 level, which will be our new 20-day low as we head into the new week, and lining up perfectly here with our 50-day moving average as well. As long as the bulls are able to continue to defend this line, this uptrend will still remain intact. If we need it, we should see some good support if we dip down here into the mid-230s, but hopefully the bulls will just get the ball rolling higher early tomorrow and get some early bids above 241.5. If not, we should see good support down into the moving averages once again, but the bulls just need to continue to defend that 234.5 area, and we should see this uptrend keep on cruising up into some new yearly highs and keep this live cattle market grinding up towards these all-time highs as well. Next up, our March feeders on the board. Those live cattle markets did see a little bit more upside last week, while these feeders did just remain steady. This March feeder contract balancing out in about a $5 range. Prices just hanging steady here between about $364 and $369. This market did have a quiet week, but still balancing out here in some bullish territory. This market continues to surf that 20-day moving average, and it has since breaking out above it back at the beginning of the month, at the beginning of December. Those Thanksgiving week lows were a nice little bounce point for this market as it has just continued to rip higher and surf that 20-day moving average. We do still remain in bullish territory and have good uptrend here. We do expect to see this market continue to find support down here in these prior week value area lows, continuing to see good buying activity down here towards 363 to 364. We expect to see that action continue and see these bulls keep bidding this market up. If we do need it, though, this market does have some good support all the way down here towards the 355 to 360 area. We should expect to see good buyer support down in between these averages, and as long as we remain trading above that 50-day average. The 20-day low here is 354.5. That'll be the new monthly low to watch as we head into tomorrow's session. Look for the bulls to continue to defend that line. That's going to be the line in the sand that this market needs to keep intact to keep this uptrend rolling. Everything is still favoring the bulls here. Technical picture still looks really solid, seeing good support and good relative strength in this feeder market. We should see those bulls continue to grind this market higher. Look for early bids above 368 to push this market back up and continue to close this overhead gap that we failed to do back here at the beginning of the month. We should see this market continue to grind up through that area, and we are just knocking on the door of those all-time highs as well. Look for this feeder market to continue sniffing those highs out and keep pushing higher as we head into Week 7. Next up, our March corn futures on the board. This market has just seen some choppy action in recent weeks after that January 12th breakdown from that WASDE report. At the moment, not really looking like we've got much of a confirmed downtrend here. We are seeing prices still trading below this prior range lows at 435, continuing to see good resistance there where we expect it to be. Prior support now turning resistance. We still expect to see those bears continue to keep this market capped here right around 435. A close above this 435 bull pivot and that prior week's high of 436 will negate that and kick this market right back up into this range here between 35 and 55. But in the meantime, we expect to see prices be pretty sticky here between 4.25 and 435. We aren't getting much bearish follow through here after this big breakdown. We have seen good resistance in the right areas, but just not really much follow through from the bears. Not really looking like they're going to be driving this market lower by any means, but just looking like this was a discount into a new price point for this corn market. With that being said, we should expect to see some resistance up here between 430 and 435. But if the bears can't really get any momentum down here through 4.25, we expect to see this range bound action continue here between about 425 and 435. Look for price to remain sticky in this area. Not looking for any major directional moves in this corn market. This thing still has very little volatility, and we should just see these sticky price conditions continue. In the meantime, though, we are going to start rolling over into this May 26 contract. We are starting to see volume move out of March here, and we should see that continue to happen over the next couple of weeks here. We'll continue to monitor that, and we'll bump up into that May contract once it overtakes March in terms of volume. So keep an eye on that over the next couple of weeks. Next up, crude oil market on the board. We did see this market slide back to the bottom end of this range that we've been in for the last couple of weeks here. Prices continuing to respect the 62 to 66.5 range. We did see early bids up there towards 66 last week before failing and settling all the way back down here towards 62 to 63. Friday, we're seeing good support down there around that 20-day and 200 moving average as it's testing them from above here. And so far here in the Globex session, continuing to see support down here near these range lows. We aren't expecting any big directional moves here, just looking for these range-bound conditions to continue. With that being said, look for buyer support down here in the bottom quarter of this range and sellers to get active once again up here in the top quarter. So anywhere between 65.30 and 66.5 and all the way down here to 62 and 63. Look for this market to just keep on passing this thing back and forth. Not really expecting any any directional moves until we can break beyond this range. So look for this market just to remain sticky here in the mid-60s. And next up, our equity markets, continuing to see some choppy and diverging action here. The Dow continues to be the leader in this market as we are seeing some good relative strength there. We did see a new all-time high over the last week or two here, pushing up there towards 50,611 on the futures, while we have put in a lower high and starting to form a little bit of a downtrend here in the NASDAQ. The S&P is stuck in the middle too, obviously being a combination of the two, so we're just going to continue to see some choppy action here in the S&P, while these Dow and the NASDAQ index continue to pull at each other. This market continues to be tough and not a super easy dollar environment. We encourage everyone to still remain somewhat defensive here. There are still small pockets of this market that continue to see good strength. Specifically, sectors in the Dow like industrials, materials, energy, and healthcare still keeping this market held up, while semiconductors, tech, and software companies continue to struggle here. As referenced here in the NASDAQ, this tech sector index is seeing a little bit more weakness here, trading in about a 9% range that we carved out back here throughout the month of November. This market still has yet to make a new all-time high or break down below those lows from November, just continuing to chop up here in about a 9% range. We did see that lower high as this market did see some resistance at those averages from below, so this is setting us up for a potential downtrend here if this market can continue to push down here below that prior week's low and make a lower high here, a lower high and a lower low that will really confirm this downtrend. We continue to see some weakness in those mega cap names. They are ranging anywhere from 12 to 28% off of their all-time highs. So those mega cap names continue to show weakness. Meanwhile, the Dow is within 2% of an all-time high, and the S&P is still within 3% of their all-time highs. So we should see. We are still seeing strength in small and mid caps, and that's what kind of keeping this market pressed up here near these all-time highs. those mega cap names make up a good portion of the Nasdaq, and so that's why we're seeing a little bit more volatility there. And we should expect to see that action continue. The picture still looks pretty muddy for those mega cap names, but as long as you're selective and can be invested in the right sectors and areas of the market, there are still some good spots to be making money and putting money to work. This is not a raise cash situation here at the moment. To get more defensive, we're going to have to wait and see if this Dow continues to break down here as well. If it starts to fail below that 50-day moving average and then start to attack this yearly opening range, that's going to be a spot where we're going to encourage everyone to get a little bit more defensive if the Dow starts to roll over as well. However, we continue to see strength in certain areas of the market, so just be selective, find the stronger sectors and stronger markets, and keep some money working in those areas. But in the meantime, stay away from tech, software, and semiconductor names. They're going to continue to struggle here, and those mega caps are still kind of have a messy picture here. So until they can carve out a little bit better structure and clean up their charts, there isn't really much to be done in these indexes. Look, if you are going to have some money at work, have it be in the Dow or those Dow sectors, and let the S&P and NASDAQ kind of battle this thing out here, and wait for smoother sailing and better days ahead when we can have a little bit more of an easy dollar environment, when we have more participation from those other sectors as well. But in the meantime, leave your money to work in the right areas and be defensive here around these mega cap names. That's all we got for this weekend's Market Watch video. With today off due to the President's Day holiday, we will have a short week, only 4 days. So we will catch you guys tomorrow night for closing comments on the 17th and a short trading week. So in the meantime, everyone have a good night, and we'll catch you guys tomorrow for closing comments.